All right. This is the first time we are going live. We have 100 followers, so I'm so excited for you to be here today. If you first welcome, um, happy Thanksgiving, and I know it's Black Friday. This is um, maybe you are here or not, but I'm glad that ultimately we're able to do this. We have done a lot of videos. If you haven't caught them before, we are currently working on a series of just talking about your statements, the business statements that we have, our profit and loss, our balance sheet, and now we're going to be talking about our cash flow. So thank you for joining or seeing our video. I am going to stay in the studio. Yeah, if you hear some kids in the background, ultimately, I have three kiddos. They are off for the day as it is the holiday. But yeah, let's go ahead and get started. I will share my screen here. See if we can get us going. Okay. I think you should be able to see. So, yeah, like I mentioned, we are talking about three different statements that we have, and today we're diving deeper into the cash flow statement. So let's go. The cash flow statement. This is a important statement, even though a lot of people just kind of live like we had talked about in the profit and loss. This one is really kind of seeing how your cash goes in and out of your business. Sometimes there are different accounting principles that you have. So you have an accrual basis. So when you actually are doing the business, you can create that invoice but that doesn't necessarily mean, you've collected all of that payment. Perhaps you've only collected 50% of it, or none of it, and you're on a net 30. So the cash flow statement really comes back to bringing everything into, okay, what is the dollar figures that are in my bank account? And it really, we'll see later, but it kind of marries both the income and the balance sheet onto this one statement and kind of really just gives that big picture of what's happening within your business. And it also can show the businesses, or it does show the business's liquidity and the ability to actually meet those obligations that you may have to your creditors, to owners, and to see if you're self-sustaining. There are three different sections within the cash flow statement, and these include your operating activities, your investing activities, and your financing activities. So what are those? Operating activities are going to be your day-to-day transactions. So a lot of this is actually going to be kind of what shows up on your income statement. So the revenue that you've received from clients, the actual cash that you've received, taking the differences between, what the invoice says and what cash you've actually received, because there may be just small discrepancies. And then supplier payments. Sometimes you may be, again, set up on a net 30 or a net 60 with your main suppliers. So this is seeing, what bill came in and you're putting onto your business and what the actual cash is that has flown, that has gone in and out of your business. And then investing activities, these are going, oh, sorry. I'll also mention in operating activities, these are things that are going to be that are your short-term obligations. So you'll also see activities from like credit cards, or if you have a line of credit that you've used for operations, this is where you'll find those in and outs as well. In investing activities, these are your long-term assets and investments. And this is like buying equipment or buying a truck, or perhaps you've sold them off or depleted it, or have decided, to use something else. These are basically taking and reinvesting into your business. You also may have invested into another side business or a friend's business. You will see these investing activities as well in this section. And then the last piece is going to be your financing activities. And this is where you kind of get your money from, besides actual cash from your invoices, but cash that maybe the investors, shareholders have inputted into the business. Perhaps you've gotten a mortgage or you have financed your equipment through a bank. You will see these items, the cash flow ins and outs on the financing activities. So this is an example of what we have for a cash flow statement, statement of cash flow or cash flow statement. And at the top, you'll see cash flow from operating activities, this 80,000. That's actually going to be what the bottom line from your profit and loss is, and it will be your net income on an accrual basis. And then you can see all of these other items. Oops. Okay, apparently we can't highlight. We'll figure it out later. This is, yeah, your current assets of how you have paid for all of the things that you have needed to pay for. Is it through the clients receiving money? Is it through a credit card? Is it your payables that you haven't, your payroll that you haven't yet paid for, or your Department of Revenue that you have, so sales tax or things like that. And then this brings us to the actual net cash from operating activities. And then the second area is cash flows from investing activities. Like we mentioned, this is items that you've actually purchased. So this company has purchased some sort of equipment in the year for, $10,000 from some source of income. And so we'll see that here. And then the cash flow from financing activities, that is again from this company just is showing the contributions and distributions from owners. But sometimes you can see these from loans or anything like that. And then the cash equivalents at the beginning of the year, this is going to be what is in your actual bank account or cash that you have on hand at whatever time period, typically, January 1st, that's the beginning of the year. And then cash equivalents at the end of the year, the 68,000. If you go to your balance sheet, you'll see that this is the exact amount that is within your bank balance at this time period. So like I said, it really kind of ties in all of the different statements together. So you have your net income at the very top from your profit and loss, all of the cash, the actual cash of each activity going in and out of the business. And at the very end, you'll end up with what is on the balance sheet from your bank balance. Okay. Why does this actually matter? This matters because it really helps show how much cash is being generated from business operations. And it will tell you if your company is truly self-sustaining or not. If you end up having a negative in your operating activities, this really shows that you need to be bringing in money from other lenders or investors and saying, hey, we have a problem. We need to, we're going to work it out, because you want to get to a place of having a positive cash flow from your operating expenses. But you may, while you're working those things out, you will need to source funds other than just your regular operations. It really helps to identify shortfalls before they become a problem. So like I said, you may need to bring that money in, and that top number shows that, but then it's trying to help you. Are you having like declining customer payments? Are they taking too long to get money to you? Or perhaps you have a big loan payment that is coming up. It will show these variations on it. It's really helpful for lenders and investors when you're looking at planning for the future, and is the company going to be able to sustain itself, or in the long term will you need to kind of help build that cash reserve up while you are creating a better, more profitable company. And sometimes it can show different trends that the income statement doesn't show alone. Perhaps this is going to be seasonal cash spikes that you may have, or shrinking operating cash despite your rising profits. So this all, the cash flow statement is one of the harder statements to really analyze, but it's an important piece to monitor and just see the trends over time. If you're not living in this statement all the time, that's okay. It definitely does take someone who is in the books more on a regular basis and to kind of see the trends of the business and what is happening to kind of help guide where that is going. And yeah, that's what I have today for the cash flow statement. Again, this is the first live, so welcome. Thank you if you're still here or if you're recapping later. We definitely would love to hear more about what you have going on in your business and see if we can help in any way to really understand, to know your numbers, and to really own your future with that, because it can get really complicated, and understanding all the complexities of it, it's okay to not do it alone and to have someone in your side of the ring to really help you out. So we have our email and our contact information, and I hope that you have a wonderful weekend. We look forward to seeing you next week on the live. I'll be starting some other small series to kind of go through things, but please make sure to check out our other videos of the income and the balance sheet. And yeah, I hope you have a fantastic rest of your day. Thanks, guys.